Do you still live at home? You're not the only one. A growing percentage of people are still living with their parents. There are several reasons for this, and the trend has really increased along with wealth inequality since the financial crisis. Understand that the more monetary abundance there is, the more people will ultimately spend on goods and services. But when times are tough, debt is racked up and people try to make it just a bit further. We are now standing at the precipice. You came here for the truth, so let me unveil that for you. Today we're going to talk about real estate, we're going to talk about inflation, and then I want to cover a whole bunch of different issues. Let's get into it right away. Parents in the US cannot get rid of their kids. The share of young adults in their late 20s living with their parents is the highest it's been in 75 years. Now I want to interject and suggest to everybody that if you want to live with your parents, there's nothing wrong with that at all. But people who simply can't afford to move out, that I have a problem with. We need to understand the underlying reasons why the average person cannot afford to move out, but they did, 4 or 5 decades ago. So we'll get more into this here. Now, the number and share of Americans living in multi-generational family households have continued to rise despite improvements in the U.S. economy. Not true. Since the Great Recession in 2016, a record 64 million people, or 20% of the U.S. population, lived with multiple generations under one roof. That should be telling. That should be a warning sign to everybody to see where it has come from since 1970 till today. 64 million people. It's not a small number. Now, while the, of course, population has increased, it's still looking quite terribly. Here, share of 25 to 29-year-olds living with their parents or grandparents. Looking at that, 35%. You'll see where it has gone over the years. I think that's an important thing to look at because it shows us not just what's happening with individuals, maybe they're changing their habits, things are happening. I know that a lot of people are going to school for longer periods of time, they're working on their careers more, they're racking up more debt, and ultimately unable to move out. These things have changed over the decades, no doubt. But I do believe that the economy, while they suggested that everything is doing just fine, I would certainly beg to differ. Now, this is one of the factors. Sneak peek at my next listing coming up. Lot is 5850 at $800,000. And if you look at the image here, it literally burnt down. The house itself has no value. You are buying the lot, and it shows us really what has happened to the real estate market and also what has happened to the value of our currencies. $800,000 for the lot. Shelter and rent inflation, year-over-year change. Definitely see where it has come from in the financial crisis time frame, and you could see that it is clearly rounded out. And ultimately, is it going to head down? I don't know, but I definitely will be keeping an eye on this and I will keep you up to date. I think that generally rent is something that, to the best of my knowledge, hasn't decreased anywhere. I don't know of a place that has really had a drop in rents. I've seen them rising. I know in Toronto, they're rising considerably year over year over year. And looking at the prices in homes, I mean, they've either sort of flatlined in many areas or they've continued to rise in many areas. Ultimately, inflation is truly present in the real estate market. Now, there have been some definite jitters. Just look at Toronto, for example, where you can see significant, ups and downs, and pockets have developed. Wells Fargo residential mortgage applications, they are down significantly over the last little while. you will see that, basically since the financial crisis somewhat, that these have started to decline, especially on a shorter term scale throughout 2017. That's not a good thing, particularly for a company like Wells Fargo. This is something that they need to continuously have more people coming in and buying homes even though they can't afford it. All right, moving on here. Accounting for all labor. So you have a big issue right here. There is this big group of people that, while the population has increased, the workforce has increased, the amount of people actually working, or I should say eligible workforce has increased, the amount of people actually working is ultimately lower than what it needs to be. This right here, heat map inflation intensity by sector. I find this funny because I showed you in the previous video that inflation for food is rising at 1.3, if I remember correctly, 1.3% over the last year. Yet it is showing you here, you can see reference intensity high is the dark color, and somehow it's 1.3%. That doesn't make any sense to me. Looking at this here, oil, gas, and consumable fuels, look at what has happened to gas prices. I know for myself here in Toronto, gas prices have increased quite a bit recently. You've seen oil come up to, what is it, a 3-year high at this point? So these statistics don't really make any sense to me right now. I don't know, when you look at, I mean, they're showing you, includes S&P 500 companies scaled by size and sector. I don't know where it's getting off on this at all. I just don't agree with it. And by the way, I show you charts, not just the ones I agree with. I show you the ones I don't agree with for those who are new here. Global PMI, global growth scare back in early 2016. And we see the same kind of drop occurring right now. This is a big problem because you need manufacturing, you need producers, you need exports. And any country requires that because it brings in a lot of revenue. The country needs to keep moving. We need to keep the economy going. But what happens when these start to decline? Well, it's not just the US that has this problem, and I'll show you more here. Major developed markets, you can see the PMI all in sync, declining. Whether we are looking at the UK, the US, the Eurozone, Japan, all of them declining right now. Sure, they could all come right back up, but it just shows us that despite, different worries in different countries, different regions, yet we can have somehow, they're in sync in this case because everything moves together. We know that. China's credit impulse here, following along with the industrial metals commodity index, and this could be a negative factor for commodities, particularly with China. China is the biggest importer and biggest consumer of so many commodities. It's insane. If they aren't buying, if they aren't using to the degree that they were, and of course it's always expected that that increases year after year, it's going to be a big problem to those countries who export to China. It's going to be a big problem for China directly as well. So we have to be very mindful for what happens with commodity prices. Chinese steel exports declining. That is not a good sign. Year-over-year change declining significantly, actually, if you look at it here. This is something that needs to be looked at further. I'll get into it more as time goes on. Seeing here that in China, we are looking at a slowdown to 6.5% from 6.9% last year. This is something that will just continue to decline. And here, interest rate differential with the US in a comfortable range, and that deposit and lending rates will become more market determined, he reiterated that the central bank will continue with prudent monetary policy. Just to summarize my chaotic way of bringing you information, the central bank in China is going to continue printing more money. That's what they're saying here. So at the same time when they're saying, you know, we are going to relax on everything we've been doing, want to let the market actually grow on its own, all of the central banks have said that, all the governments have been saying that, and then at the same time they come out and say, don't worry, we're going to print more money. So I don't know what it's going to be, but it's not really looking pretty if the central bank has to constantly be there to print more money. It's not a good idea, obviously. Okay, very quickly, two more. Ride-hailing apps surpass regular taxis in New York City. This has increased so rapidly over the past few years. It is insane, going from 4.5 million in 2014 up to 160 million. Things change as time goes on, and that's really the reason I mentioned this here, not to talk about the technology, but just simply to remind everybody that what was once, you know, the way it was, it changes. It changes as time goes on. And this right here is looking at the Rial. You can see the currency in Iran. As time goes on, it has been declining. I mean, that's very clear looking from where it was back in the 90s. But ultimately, it's getting destroyed. It is getting absolutely destroyed. And now they're going to try to keep it at this rate of 42,000 to the US dollar. And if you look, actually, they're in a very, very terrible situation right now because of the individuals who are in the country. They have actually felt the effects of this inflation versus the US dollar, despite the fact that it's within its own country, buying goods within its own country. It's still affected by what happens in the outside world. Even though that they have weaned themselves off the US dollar to quite a degree, it still doesn't matter. Really doesn't matter. So it's something to keep our eyes on. Venezuela is not the only country that has had their currency devalued significantly. That's all for this video. If you found it informative, if you found it chaotic, if you found it wild and crazy, then please give me a thumbs up. Last but not least, if you found this video informative, I know that you will find my books, The Money GPS and my new release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, there's a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.